Q3 2022 saw the biggest household net worth decline ever recorded in history. This is absolutely shocking. Let's get right into it. $1.6 trillion in wealth is set to evaporate over the course of the next year. So this is just an absolutely insane number. But when you think of the sheer size of the bubble that we're in right now, it is actually not that large. The bubble is estimated to be around $6 to $10 trillion, which is bigger than Canada's entire economy. And that is just one scary thought of many. As all this household wealth evaporates, you are going to see people recess. You are going to see people cut back on spending. And in fact, we're already seeing that happen. And it's not just happening with households, it's also happening with businesses, because there is a massive bubble within the private debt sector, which we covered in the prior video. So it's not just households cutting back on spending, it's also businesses cutting back on spending. And all that does is make the recession worse, because then essentially you've got less dollars circulating in the economy. That means businesses are making less money. That means that they're already fighting their compressed margins from inflation and interest rate hikes on all their debt, because we know they're highly indebted. And then that does not make a good recipe, because that means that they then have to lay off workers, as they're not going to have enough money to sustain themselves. This is all happening during a period of time where job losses aren't even that high. Think about it. The unemployment rate right now is not even that high. When it starts to get really high, this is going to be a very, very crucial time for Canada, because essentially you are going to have governments try and intervene fiscally, and hopefully they don't, because that could devalue and, quite frankly, destroy the currency, as we saw how close we got to that just in 2020. And during the pandemic, home prices went up 52%. This drove a gain in $3.9 trillion in household wealth. But this is really just perceived household wealth, and that's the thing that a lot of people don't really realize. You see, this is all just paper gains when you really think about it. It isn't actually real, it's not realized, as in people haven't actually got that money. Like, for example, let's say you own your home and your home goes from $500,000 to $1 million. Well, unless you actually sell that home and realize that profit, then you're never going to see that money. So essentially that does affect one thing hugely though, which is the wealth effect. And central bankers have acknowledged that the wealth effect actually exists, and they try and use that to their advantage. But the thing is, it has a lot of unintended consequences that we are seeing right now play out. You see, the wealth effect drives people to spend more, to get into even more debt, to get more speculative. Oh, look, honey, our house went up to $1 million in value, so why don't we take out $200,000 and go and buy that vacation home? And it kind of breeds this mania, which happened during 2020 and 2021. We saw the start of this towards the end of 2020, and then it ripped through 2021 and came to a screeching halt, because it did cause inflation. You see, a lot of people blame inflation on the supply chain, but the thing is, what caused that initially to start? The supply chain got so messed up because the government introduced so much stimulus money into people's pockets that they went out and spent, and then they had to order all of that stuff from overseas because we weren't producing it here because of the pandemic. And then guess what? We don't produce a lot anyway. So then all that stuff basically screwed up the supply chain, because it all happened at once. You see, instead of creating businesses that provide goods and services to people, people went out and bought into these emotional asset bubbles, things like the real estate bubble, things like the stock market bubble, thinking that it was going to be never ending and thinking that they could just hit on the new pot of gold. And as we are seeing very quickly this year, that is not the case, and it can quickly disappear. By the end of this year, RBC estimates that household wealth will have declined by $1.1 trillion already. Isn't that just an insane number? But again, this is just perceived household wealth, because it always depends on your perspective of whether you think that is real or not real. Because the thing is, it's really just a Fugazi, to use Matthew McConaughey's words. Isn't it also funny how a bank is coming out and saying these things? Don't you think that's funny? Because the banks are the cause of this bubble. Just think about it. Take a step back for a second and think about it. If the banks hadn't have lent out all this money, if they hadn't have created all and done all these financial engineering, creating products like the home equity line of credit, the RRSP loan, then we wouldn't be in such of a mess as we are in right now. And if the government regulators hadn't been asleep at the wheel, we also wouldn't be in this mess either. The fact is, nobody is going to admit responsibility to this, and just like in the US, nobody is going to go to jail over this, when there should be people that should be held accountable for this, and I just hope that they are held accountable and we see that happen. Oxford Economics has also warned of a global real estate correction, and it says that Canada is going to lead the way, and we are certainly seeing the signs of that. Never before have we had an economy that is so dependent on these asset bubbles, and it is coming to a screeching halt. And the thing is, people can't get their head around and realize that stimulus money is not going to solve this problem, and it can make it a hell of a lot worse. There is going to be a lot of collateral damage. There is going to be a lot of pain that is going to be caused by this, but we have to move through this in order to recover from it. Builders and construction companies will go bankrupt as they got caught up in the bullwhip effect, and we will see many other businesses that go under as collateral damage as a result of this, as there are so many businesses that are now dependent on this bubble, and we're only just going to start to see how many of those businesses are going bust during next year. In the end, speculation never ends in a good place. It always has to be paid back, and this is no exception to that rule. The fact is, people got way too greedy, and that means that somebody has to pay for that, and we will all be paying as a result of that. So if you enjoyed this video, maybe you'll enjoy that one right there, or maybe you'll enjoy this one that the YouTube algorithm recommends. Thank you so much for watching. Thank you to all the new subscribers, and I will see you on the next video. Take care.